Its newish lighting division has been the performer for ARB Holdings in the year under review, helping the lighting and electrical group post a 24% increase in revenue and a 15% rise in headline earnings to almost 40 cents a share. It's declared both an annual and a special dividend, and CEO Byron Nichles joins us in studio now. Byron, thanks very much for coming in. Byron, presumably the lighting division really was helped by it trading for the first full year with the Eurolux business within that unit. So, but that also seemed to be the stronger performer within the group.
Yeah, certainly. I mean, overall we're very pleased with the results, but certainly the star performer of the year was the lighting division that put in a stellar performance and really delivered a large portion of the top and bottom line growth.
I mean, that suggests that, well, the original business of ARB, it needs work. Is it something that you guys need to look at, or is it simply a factor of the market being difficult? It's not a great market for the construction sector, and this is why things have been rather depressed within the original electrical division.
Sure, I think to contextualize it, the electrical division, which is the core and call it the old business of ARB, still delivered a decent result. Yeah, I think 16% up revenue, 5% up operating, but comparative to the stellar performance of lighting was perhaps a bit of a laggard this year. Certainly not so much a case of requiring work as much as what a case of being led by the sort of macroeconomic conditions. When you consider that a lot of the sectors it supplies into, construction, certainly been in the doldrums of late, mining facing some significant challenges, public sector infrastructure spend really not coming through at the pace we certainly would like to see and need to see. So I think really led more by the macro environment than by company-specific factors.
Do you see anything changing subsequent to the year end? Have conditions improved in any way, or are they as they were?
You know, certainly, as I said to someone earlier, I changed the batteries in my crystal ball last night, but it didn't really help. Certainly what our view is that for the foreseeable future, we think that it will be more of the same. We don't see any major improvement in the macro environment or in any of those sectors. Obviously well placed for any improvement, but we don't anticipate that. So our focus really is on making sure we extract the synergies, the benefits from the recent acquisitions that we made, and we think that will drive the improved performance in that division.
Okay, so tell us about those two recent acquisitions. It was Electro-Rumen, which sounds quite fun, and Cable Suppliers. What do they do? What do they bring to the business of ARB? And are they actually direct competitors, because they're both in sort of wholesaling the cabling side of the business?
Sure. If we start first with Industrial Cable Supplies, we acquired that at the beginning of the financial year, so July last year. It's a cable distribution business with branches in central Joburg and Rustenburg. Obviously that was part of the disappointment in the year under review. We acquired it just pre-Marikana last year. Obviously since then we've seen a slowdown in the general Rustenburg environment, as well as the mining sector in particular, the platinum mines. But certainly a big business. It's certainly the larger of the two acquisitions, and brings almost 200 million rands worth of revenue to the table, and gave us a footprint in the Rustenburg and the Northwest Province, where previously we had no established branch network. Electro-Rumen very similarly gave us footprint in the Free State. They've got a branch in Bloemfontein as well as in Northern Cape Katu. Smaller business, traditionally been more focused on the smaller electrical products over the trade counter type business. Not very strong in cable, so really we see the combination of the two as complementing each other very nicely and extending our footprint across all 9 provinces now.
Yeah. So now, just going back to one of the reasons why you bought Industrial Cable Supplies, has it changed dramatically? I mean, do you think this was a mistake to buy the business exposed as it is to the Rustenburg area, where things are really, really tough, and I imagine there is a lot of I guess right-sizing and downscaling happening?
No, we certainly don't think it was a mistake. We certainly don't regret the acquisition. We think it's a cyclical factor of where that particular region and market finds itself right now. But we certainly do see growth opportunity. One of the initiatives we put in there is we've broadened ICS's product range from being purely in cable to including the overhead line product that the rest of our group distributes, to include the general electrical product. Okay. So we see a natural extension, and the Rustenburg and the Northwest Province generally has been quite a successful market for us. So long term, we think it's very strategic for us to be there.
Byron, are you looking to chase other markets? If South Africa is going to be, if we're just going to muddle along growth-wise, and as long as the government is still fiddling while the country's infrastructure falls down around our ears, not good for a company like you. So what do? Do you have to look for other markets? Would you look further north?
Yeah, certainly. Yeah, I think Africa seems to be on everybody's lips right now and seems to be the flavour of the month. And there's no secret that when you look at the GDP growth rate in sub-Saharan Africa relative to South Africa. That said, sub-Saharan Africa or Africa is a continent of 54 countries as opposed to one country. And a lot of people talk about an Africa strategy as if it's one country.
Yeah.
A lot of opportunity. We also see quite a lot of risk. Credit being one, poor infrastructure being another, political unrest, corruption. So we've always had a very conservative approach, or a rather conservative approach to the continent, but certainly is an area that we are seeing some pleasing growth coming out of.
So you actually do have business with African countries?
Yes, we certainly do. We don't have any infrastructure or branch network outside of South Africa, but we certainly do supply to most of the SADC countries and even further afield, Ghana.
So would you look to set up branch infrastructure or not at this stage?
Yeah, it's certainly something that's on our mind. Again, as I said, we take a conservative approach. So we've seen many companies go and do that and really struggle.
Yeah.
Our approach is more an incremental one of saying, let's first understand the lie of the land, the business landscape, the social environment, make sure we've got the right local partners before we'd look to put fixed investment in. Okay.
And going back to the lighting division, which we've ignored, ironically, given that it was the star performer, are there more businesses that you would look to buy that are exposed, I suppose, more to the retail space, businesses like Eurolux? Are there any other businesses that you can acquire? Because you do mention in your commentary that you are still on the lookout for acquisitions.
Specifically in the lighting space?
Okay.
In the lighting space, not really. We don't see too much of an acquisition pipeline there. We think that there's a lot of organic growth that will come through just by broadening the product range. Eurolux on the back of their numbers, and it was only included for 6 months last year, but if you looked at their full 12 months results, which we obviously have access to, double-digit, very strong top-line growth. So we believe that they're taking market share, and we think that the organic growth prospects are far more enticing than acquisition opportunities in the lighting space. Okay. Outside of the lighting space, we certainly are looking at acquisitions that will take us into new product markets.
Okay, and just ending on, I suppose, the cash that you have at your disposition, you paid a special dividend, which is very welcome to shareholders. Was there any particular thinking behind that, given that you are still looking for acquisitions? I mean, will you be able to have the cash to, having paid a special dividend, and then to go and do the deals that you may want?
Yeah, indeed. In fact, that's exactly the discussion that we had at the board yesterday. And what essentially where it came from is, when we saw a very stellar cash generative performance in the past year, we've got a balance sheet that supposedly could be argued to be a little bit lazy in the sense that there's absolutely no debt in the balance sheet.
Yeah.
Very strong asset underpin. We think the business is in good shape and will continue to generate cash going forward. Taking all of that into account, taking our acquisition ambitions into account, we still felt that there was some surplus cash, and hence we returned the special dividend to shareholders as well.
Well, very welcome. Byron, we have to leave it there. Thanks very much for joining us.
Super, thanks Julieta.
That's Byron Nichles, the CEO of ARB Holdings.